Today I'll be talking about one of the most talked about stocks in Nasdaq. It will be pretty much on everyone's radar at the moment, Tesla. Tesla is going to go through a 5-to-1 stock split in 31st of August. Just like Apple and Amazon, Tesla has been recently hitting all-time highs every week, but growing at a much faster rate. Please note, don't take this video as your financial advice, and please do your own research as well. The business model of Tesla is actually insane. It's really diverse and branches into different income generating aspects. Not just producing and selling electric vehicles, Tesla also branches into generating car batteries, charge points for electric vehicles, and solar energy production. Also, the amount of data Tesla has accumulated and ongoingly accumulate from their electric vehicles will be priceless. It will be used to aid their self-driving capability and the development of the software, and who knows how much the software will be worth in the near future. First, let's look at Tesla's company profile for a bit of fundamental analysis. Remembering the ratio and the range categories that I talked about in my YouTube video, the DE ratio and the current ratio of Tesla shows around 1 and 1.25, and these sit very safe within those safe categories. Basically means Tesla is efficiently using their capital into their projects and also are very capable to cover the short-term liabilities. However, if we look at the PE ratio of Tesla, it's actually insanely high compared to the industry average and also the Nasdaq average. This can generally mean the price of Tesla is overvalued, but whether or not if we can use this PE ratio of Tesla to value its stock still remain questionable. Tesla has not yet been able to generate a positive net income. It currently sits at negative $862 million. However, the market cap of Tesla currently sits at $412 billion, making it the biggest automotive company overtaking Toyota. So following the trend from my previous YouTube video, let's check out Tesla's earning history by quarter. We can check out Tesla's reported revenue and compare it to the revenue estimated by the analysts. Tesla has always been unpredictable with their reported revenue, but the most latest report smashed the estimated revenue by more than $1 billion. This caused a big hype of investors leading towards the reporting date and resulted in a big surge in Tesla's stock price after the public reporting. By digging deeper into the report, we can break down Tesla's revenue into their different business categories. But what we are mostly interested in, and should only be interested in at the moment, is their total deliveries made of their electric vehicles. Around 90,000 electric vehicles were delivered. This was higher than the previous quarter, and even through the phase of the pandemic, this is a very solid number. So this is why the stock of Tesla surged when this report was announced. This chart shows the sales of electric vehicles by model in the US, and it shows Tesla's market dominance boom since 2018. This not only tells that Tesla has a big lead in sales of electric vehicles, but also a very significant lead in obtaining data from their electric vehicles for the development of their self-driving capability. So this is my prediction of Tesla's after their stock split. Volatility will increase with the split due to the shorters, and this is called post-split depression. Even with the adjusted PE ratio, Tesla will still be overvalued by the books, but we definitely can't ignore the hype and the potential of their business model, and I think this is what's driving the market value upwards. This is my personal opinion. Battery Day on the 22nd of September will be a key date for investors. Elon Musk will introduce new products under Tesla and also the anticipated longer lasting battery for the performance of the electric vehicles. And it's definitely a high risk stock for a long hold. Even with Tesla's strong business model and current success of their market dominance, always remember that one tweet can determine the future outlook of the stock. So make sure you diversify your investments into different categories and protect yourself while aiming to grow your investments. Please subscribe and hit the like button, and feel free to leave a comment if you want me to review any other stocks.